Hello, hello, builders. Welcome to Ask the Expert with Live Richer Academy. My name is Tamara. I'm your Academy Manager. And tonight we have a returning expert, Robin Alexander. She is here tonight to talk to us about understanding life insurance and, final expense policies, which we all need to be fully aware of. So Robin, I'm just going to give you a moment to say hello so they can see your face.
All right, so Listening Builders is super exciting to be vegan with you guys.
And this is kind of a special one because this is the end of 2018. So you are wrapping up the year for us and getting us ready for life and life situations. You just never know what's going to happen. God willing, we are all here for 2019, 2020 and beyond. So we're going to walk through how we can prepare ourselves for that. And Robin's going to break everything down in layman terms. So as we are getting prepared, I just want to make sure you all can hear us. Just give me a yes, a thumbs up, a smiley face, whatever you have inside of the chat, and let us know that you're here and that you can hear us. Also, tell us where you're from. We want to know where you're from. All right, so I'm seeing some comments coming through. I'm hearing that there's an echo on your end, Robin. I don't know if you're able to grab headphones. If you have any nearby, it could be, basic headphones. Let's see if that helps out a little bit.
Okay.
And as you guys are pouring in, just let us know how was the Christmas and holiday break? Any plans for the new year as we get Robin settled with some headphones possibly? All right, we have Brooklyn. I'm not raised in Brooklyn, but I was born. That's where my whole entire family is from, Brooklyn, in the hubby. All right, Jacksonville, Florida. I lived in Gainesville, Daytona, Weston, and Ocala. So shout out to Florida, Philly. How y'all doing with that game? I heard it was a good day. Hi, Elena. I'm in South Carolina. I'm near Columbia, and I just moved here earlier this year in March from Florida. And South Carolina has been good, so I hope it's been good to you. All right, Boogie Down Bronx, I see you. Okay, I'm seeing that some people are doing some vision board planning for 2019. As I am preparing for Robin to come back, I just want to say, if you have not checked out Tiffany's last live inside of the Facebook group from, I want to say it was last Saturday or last Sunday, you have to view it. She was on fire. She had us all prepared and ready to go into 2019 with our audacious goals. So if you have not viewed that live lesson with Tiffany, please tune into the Facebook group and see that. Right.
Let's see.
All right, we're testing to go.
Is that a little better?
You sound good to me. Let's see if you sound good to the audience. I can't see you. It looks like your camera went off.
Let's see.
And Trina, there isn't a title for it. It's just pinned to the top of the Facebook group. I see your name. So if anyone is in the Facebook group right now, feel free to tag Trina. Otherwise, I will tag you at the end of this lesson. I'm writing your name down now. All right. So Robin, let's do a little mic test. 1, 2, 1, 2.
1, 2, 1, 2.
A little better to me. Yeah, they're saying that sounds much better. So while Robin is, settled, we got our mic going, I just want to introduce you to her officially in her own words. She is just a homegirl who is convinced that she can change her world with a dream and a plan. Robin's financial services and insurance agency, Truth Financial Group, is a financial service and insurance agency. And she's here to serve the underserved. That sounds familiar. All of our experts, they're just really about serving you and then also serving other people in need. We are, she said that they're an agency of licensed, education-focused, customer service-driven agents. And they navigate you through the various products that A-rated insurance companies offer in order for you to choose the best financial solution for you and your family or your business needs. So Robin, again, thank you for joining us. Once again, she is a returning expert. She taught a lesson called Tax-Free Retirement and Guaranteed Lifelong Income. So if this is your first time joining us, this is the perfect first lesson. And then after that, I would say go ahead and check out tax-free retirement and guaranteed lifelong income. So Robin, today we are talking about understanding life insurance. We're breaking it down and keeping it real simple, right?
Absolutely. There's so many different facets to life insurance. Most people, when they hear the words life insurance, they automatically start to think final expense. When I pass or when I die, that's life insurance. But that is so far from the truth until, it's crazy. These days, life insurance, if you don't have access to the money or the death benefit before you pass, then you do not have life insurance. You, in fact, have final expense.
Okay, so let's break down final expense a little bit more. So when you say you have final expense, what does that mean for your family?
Okay, final expense means that when you pass, you are leaving a lump sum of money behind for your children or for a spouse or even for organization. It's really up to you. There's really many things that you can do with that death benefit, but it's only a death benefit. It's only a lump sum of money that you leave behind to help family or whoever with expenses or to keep their lifestyle going when they lose you as that income.
Thank you. So I have a lot of people saying yes, they're just so happy to be here because they do not understand life insurance at all. So when we just talk about the definition of life insurance and what that means, and let's just say someone just wants to just learn the basics and dig a little bit more into that, where would you tell them to begin as far as educating themselves?
Honestly, I hate to sound cliche, but Google is actually a really great resource. If you know how to Google the right creditable resources, such as entrepreneur.com, there's articles all throughout that website. There's articles all throughout Forbes.com even. I recently just did an article with Black Enterprise. So there's information from creditable sources on life insurance. But if you really want to get down to the nitty gritty and understand all the different various facets of a policy or just of the industry period, you definitely need to reach out to a consultant that's next to you or that's close to you. Sometimes you can reach out to them online or maybe go to your local office. But if you just go to that person, let them explain to you the best as possible what's out there for you and what could possibly meet your life insurance needs and help you understand what it is.
Thank you so much. And one thing that I think is so interesting about life insurance in general is that, first of all, there's millions of people that don't have it. And two, I mean, we make sure we have insurance for everything else. We have insurance for our companies, we have insurance for our cell phone, for our rings if we're married, or home insurance. We make sure we're covered and we forget about the most precious part of life, which is our own life. So I think it's very important that we're here and that we're speaking to this and that you're breaking down the difference between the two. So let's say you've had life insurance for years. I mean, there's times where people don't even realize that they have what you call a, final expense insurance. So when you're looking through your policies, how can you tell which one you have?
All right, so there's some terms out there that you could look at in your policy if you have your policy in front of you or whenever you get into it. And there's some terms that you can look at that will specifically be a red flag to tell you if you have life insurance or if you have final expense, okay? Some of those terms can include the words index funds. Some of the words could include cash value. Okay, this is all access to money in your policy that you can use while you're still alive. Other terms could be living benefits. Okay, living benefits cover a cluster of riders. Those riders include critical, chronic, terminal, and sometimes even critical injury. All right. So if you hear critical illness, right, or if you see those words in your policy, then you have a life insurance policy, something that you can access while you're alive. Okay. And also, if you see any words that says equity or fixed interest rate, or if you see something that says variable interest rate, those things all allow you to have access to your life insurance policy, and you can use those benefits while you're still here, living and breathing.
Absolutely. And let's talk about that. Let's talk about the different reasons why you would need to even use life insurance while you're living. Can you kind of break that down?
Absolutely. So, one of the things that I would say pains most people when they get in a situation where they have a full-time job. Let's say they're salaried, and let's say they do have, policies in place, right? And it's just life insurance that came with the job, or some kind of term insurance that came with the job, etc. If you run into a situation where you become disabled or injured or ill for any reason, and you may even have medical insurance, but medical insurance will not pay for things outside of medical bills. Okay. Living benefits will pay for not just medical bills, but it will give you access in lump sums, thousands of dollars at one time, to pay for mortgages, pay for car notes, pay for your child to get to and from school, pay for your nanny. It's basically like a lifestyle type of protection in order for your lifestyle to continue while you're not able to work for whatever reason.
Perfect. So, how many different policies are there?
Oh my God, there are plenty. It seems like, huh?
I was gonna say, well, let's talk about maybe the top 3 or 4.
Okay, so one of the top insurances types is term insurance. Term insurance is super popular and it's very attractive to those who may have temporary liabilities. What do I mean by that? Let's say you have a business, okay? And let's say that business is currently valued at $500,000. All right. You are really, really a perfect client for a term policy, because if anything happens to you during the life of that business, then your business partners are also able to keep the business going if you pass, okay, or even if you are injured, okay. If you have a mortgage, let's say you have a 30-year mortgage, you'll even see words like mortgage protection in your insurance policy. And that basically just says your mortgage is 30 years and this term policy is going to last for 30 years just in case something happens. You may not be able to afford the full permanent policy type, which is a different type of policy. Permanent policies are whole life policies, or even universal life policies. Those policies last the entire duration of your life, whether you live to 100 years old or if you live to 115 years old. Those policies are completely permanent no matter how much time passes.
Absolutely. And it's funny, people are out there living. I just saw on CNN someone lived to be 112 years old. So
Yes.
because I don't know what's going on in your family bloodline, that life will be cut short. You can live for a long
Yeah.
time. So hey, it just never hurts.
Oh,
So
yeah.
would you say that there are maybe like 4 different parts to a policy that you should definitely look at if
Yeah.
you're beginning for the first time and an insurance agent or salesperson is kind of walking you through your policy? What should we be like completely, most interested in?
Okay, so the 4 roles, I'll start with that. The 4 roles of a policy is you have the insurance carrier. Okay, you have the actual company who is doing the insuring whoever you're looking for a policy for. So you have the insurance company, and there are over 3,000 insurance companies, okay? And you can find mom and pop agencies, and then you can find the A-rated agencies that are well known, that are household names. And A-rated just simply means they have been severely vetted by the industry, and are known for having a good reputation and having a good reputation of paying out to their customers when it comes to meeting their policy before they pass or creating legacies, etc. Okay, so that's the first one. The second thing is understanding that the role of the insured, that's the person who is on the actual policy that the underwriter is going to look at. They're going to look at that insured's ability to be approved for that policy. They're going to look at health. They're going to see, has that person ever had a DUI? Has that person ever, had any time behind bars? I mean, little things like that. That's what the underwriter is looking for. It's not that you can't get approved, but all companies don't approve the same type of clients. So it's really important that you're working with an agent that has access to multiple companies, various companies, because everybody's background, everybody's goals, financial goals are also different. The last two is the beneficiary and the owner. Okay, the owner of the policy. That means they don't go through any underwriting. All right, they don't go through health screening. They don't go through any type of criminal background screening or anything. That person's main responsibility is to make sure that the premium invested, whether you choose a per month investment or a yearly investment, that just means that they are responsible for paying that. That's what the owner does. And the owner and the insured does not have to be the same person. Lastly, the beneficiary, and that's pretty, understandable. The beneficiary is just the person who receives whatever you have in your policy, whether it's a death benefit and cash value, or if it's just a death benefit.
Awesome. That was great information. And I hope you guys are taking notes, because in 2019, as you're headed in, if you do not have life insurance, these are the things that you want to look for. We do have a few questions coming in, so I'm just going to ask a few. So Elena says she has a term and whole life. I'm assuming combined. Can you explain exactly what that means?
Okay, so with a term policy and a whole life policy, those are two separate policies. You can't get that into one policy. That's two completely different things. The term policy that she has, I'm not sure the reason why she has it, but that term policy may be null and void if she already has a whole life policy. She may want to look into using the amount of money that she's spending per month or per year for that term policy and using that to increase the value of her whole life policy, because she could probably get more bang for her buck in that whole life policy, being that, number one, whole life policies usually have an interest rate, which means that it has a cash value. So the more money you invest in a whole life policy with that cash value, the more cash value you can actually grow through the life of that policy. And you can use that money for anything, for a down payment for a home, use Tiffany's Live Richer Challenge for a home buy, use that policy, that cash value policy, go use that and get your house and, a down payment for a car, just whatever. So yeah, those are two different things though.
Okay, she did say it's combined. So Elena, let me know if you have any more questions about that. In the event that there's any real specific questions, you might have to contact the insurance company to figure out exactly what's going on there.
She might be saying combined because it's coming from the same carrier. If it's the same carrier, then I can understand what she means by combined then.
Okay. All right, we have a detailed question here. She said, good evening. Are there universal life policies that expire after a certain amount of years? She said she believes hers states it will expire at 89 years, but she bought it when she was 26.
You know what? When it comes to universal life and sometimes even whole life and index universal life, those three different policies, it depends on how your agent bills those policies. There are different options that we click on in the different software that these insurance carriers provide us, and we literally build it according to your needs. So if that agent built it to actually lapse at 89 years old, then there's a very high possibility that at 89 years old, you're going to have to find new insurance, or you may need to go ahead and look at a different type of policy with that insurance agent to make sure that it lasts. There are policies that are called no lapse policies, meaning no matter what age you get, you will not have the risk of actually losing that policy. That actually happened to a great aunt of mine. She had a policy and it lapsed on her. And when she passed, she thought she had a policy that had a benefit, and her sons had to come out of pocket and pay for her final expenses. So.
Oh my gosh, that is devastating. So yeah, that's definitely something you would want to look into to figure out if that could be extended or if you need to change that. The next question is, and I guess this might depend on different situations. So Trina wants to know, which is better, whole life or term?
It depends on the situation. If you are wanting to just get in the game, I always tell people during consultations, listen, if you cannot afford the absolute best policy, which is a an index universal life policy, if you can't afford it, get started with term. Because what that does is you get approved with the company. Once you're approved, they lock in your status, your insurability. That's what we call it in financial service. They lock in your insurability. So when, let's say 6 months from now, and you have an increase in your income or whatever the case may be, but you can now afford something better, then yeah, go ahead and lock that in with term and then switch it over to IUL so that you can get the policy that has more benefits to it.
Thank you so much. And these questions are pouring through. I just wanted to see if there was anything else you wanted to state as far as the different types of insurance policies out there. You spoke about whole, you spoke about term, and you mentioned universal. Did you want to go a little bit more into universal?
Yeah, because when it comes to universal life, the reason why it's kind of the la creme de la creme, is like the best policy, is because it's a one-stop shop and it's flexible with your life. You can change the amount of premium throughout the month. Let's say you're having a rough month or you got laid off or whatever the case may be. You can change the amount that you actually pay and invest per month to flow and be flexible with your lifestyle. So if anything changes, you can also change the death benefit amount if you need to. And if you get the index universal life, that's what I call the rich people's Roth. You know, if you're really wanting to grow money, that's the policy that's connected to the performance of the stock market. It is zero risk, but you have all of the cash value when the stock market does well. And when the stock market tanks, you lose no money because of something called the floor. Those are the policies that we tend to focus on and we tend to help a lot of families with. But if you can't get started with it, of course, like I said, just start with a term policy. And then when you can switch it out to IUL, go that route immediately.
All right. So I've heard a lot about IUL, and you know, I hear a lot of people, they buy multiple policies so that it's tax-free, right? They don't have to worry about too much of that. So definitely something to look into. And you do have to do a lot of research, because when it comes to life insurance, there's just noise everywhere about it. So it's really about your personal goals, your personal investments that you already have. And Robin did teach a lesson where she went a little bit more into detail about it. And that link will be included at the bottom of this lesson as well. So let's talk about some of the restrictions or things that might concern us when we're applying for life insurance. You know, there's times where people think they're too old to apply, or they're too ill. Can you kind of just walk us through just the process and what to prepare for if you are dealing with any of those things?
Well, there's a number of things that companies are looking for. Of course, even when it comes to home buying, like the perfect client is always young and wealthy, etc. But when it comes to life insurance, it does not matter how old you are or even how ill you are. And I say that maybe slightly loosely because you can't like be halfway dead and think you're going to get a policy for $1 million. It just doesn't work that way. However, if you've ever had cancer or if you have diabetes, if you have high blood pressure, there are a lot of companies that will still issue you a policy, even though you have had all of these health issues or maybe are still dealing with them. So you just have to know, and I shouldn't say you, but your agent, whoever you're working with, whatever agency you're working with, they should have access to maybe 5 to 10 different companies that can cover various diseases, various backgrounds, even criminal. Some people don't think a DUI or speeding tickets would prevent them from getting a life insurance policy. But if it's one of those really, really, really special IULs, if you have a DUI or some kind of criminal background, they do not want to take the risk of covering you because the company takes on all the liability, so things like that. Sometimes if you have a tax lien, sometimes if you even have a foreclosure, they can see all of that. And depending on how old the foreclosure is, etc., can sometimes affect your ability to get the type of policy that you want. But if you are sick, ill, all those major diseases, there is a company out there. It's going to be more expensive, of course, because again, that company is taking on all the liabilities. They're taking on all the risks, all the liabilities. So your policy payment, the investment amount per year or per month is definitely going to be higher. But if you start off early, if you start off as early as possible, that's always your best route to do. Start now instead of later. But there's definitely something out there. If you're 70 years old, 80 years old, there are guaranteed issue policies that you can get, but they're just super expensive.
Wow. Well, that's good to know. And
Yeah.
you guys, Robin was chuckling because she could see my face. I was just blown away by some of the information that she was sharing there.
Yeah.
So let me ask you this. Is there one special tool, website, resource that you would recommend that allows our members to kind of just filter through so they know exactly who to apply to, depending on their circumstances?
You know what? I want to answer it one way, but I know that we talked earlier, so I'm like, I don't know what to give. You know what? What I can say is, to be completely transparent, to be completely honest, if they even just email me, I can tell them where to go. It really just depends because locally there's so many people, Tamara, there's so many agents, and there are a lot of good agents out there. There are red flags that you can look for when dealing with an agent because you don't want them to sell you. Being a salesperson is something you do not want to, you don't want to deal with that type of personality. You want to deal with somebody who will guide you, who will be a guide through the process, because we're not dealing with anyone's money. We should not see anyone's cash. We shouldn't see a check from anyone. Our purpose is to help families. Our purpose is to guide you to which company best fits your financial needs and your legacy goals and how to grow your money. So, I can give you a lot of answers as to where they can go, et cetera. But if they even go to my website, to the wealthqueendom.com, that would probably be the best resource for them. So.
Perfect. And you guys have the website, as you all know, and I know there's a few people on here that are probably on their first Ask the Expert. We have a lot of new members, so welcome. But all of the links that she's sharing as far as her personal links are going to be below this video. And then after Ask the Expert, there will be a post in the Facebook group. You will see all of the helpful links and resources there too. Can we jump into a little bit more for questions?
Yeah.
Okay, 1 second. Okay, when you switch from one policy type to another, do you use the money you have already invested?
You can. It depends on how long you've been having that policy. there's something called a surrender value. Okay, your surrender value is basically saying if you close out this policy, this is how much cash value you will actually be able to bring over with you to a new policy, or be able to cash out and just put in your bank account and do whatever you want to do with it. So look at that surrender value, that surrender cash value, and that'll tell you how much money you have. If you have a young policy that has a cash value, and when I say young, I'm saying like maybe 1 or 2 or 3 years old, usually that surrender value is pretty much the total of what's in your account. If you're talking about a policy that's maybe 5 years or older, then you definitely should have enough cash value in there to be able to close that policy out and start a new policy, a better policy with a better interest rate and compounding interest.
Okay.
Yeah.
So as we kind of mentioned earlier, there are a lot of insurance companies out there. Irina wants to know, is it better to work with an insurance agent, or is it also okay to search and buy policies online?
I think online is awesome, actually. Online is awesome. The one thing I think beats out working online compared to working with an agent is that when you're talking to an agent, someone who has either their own agency or just an independent broker, is that they can kind of give you the fine details that you may not be able to read online, or they may not provide that online. So for instance, if you go online and do a quote, they'll give you different numbers. They'll say this is per month and these are the different riders available to you. But what they won't tell you is if you hit year 3 or if you hit year 2, or how much money will you have access to with your living benefits if such and such happen. It's a much more personalized experience when you do it with an agent. Mind you, again, there are great agents out there, and there are a lot of agents who do not charge, okay? That's one thing that we make sure that we don't do here at Truth Financial. You want to find somebody local that does not charge you a fee to work with them. And it's just a much better experience. It's more customizable. Sometimes you don't even know what you're looking for. You just know you want insurance. You know you want to have certain protections in place, etc. So definitely find someone who is who's willing to work with you and give you the time and attention that you need.
Thank you so much. Zaina wants to know, are there any agencies that allow the undocumented to receive life insurance?
If they're undocumented, meaning that they don't have a visa or a green card or anything, usually no, because citizenship is one of those things that you do have to prove during underwriting.
All right.
Yeah.
Question. Can you talk more? Okay, she wants to talk a little bit more about final expense policies. She thought life insurance covered that and didn't know it was something separate.
So final expense basically means you do not have anything else but a death benefit. That's all it is. It falls under the umbrella of life insurance, but it's actually death insurance. It does not protect your life at all. All it does is protect the lives of those that you leave behind. But life insurance has evolved in such a way to where now, these days, if you do not have a policy that has living benefits, then that's when we say, listen, you don't have life insurance, because life insurance protects your life while you're still here. Death insurance is final expense, although it still falls under life insurance, the life insurance umbrella.
So I know you talked about this a little earlier, but just to remind those that are coming in, just name a few things that are going to cover you during your life if you need to use your life insurance.
Okay, look for terms like terminal illness rider. That's if you get sick and say the doctor says, oh, you have 12 months to live. What are you going to do? You can't depend on long-term care. You can't get as much money from long-term disability or short-term disability. You want to be able to have a lump sum of money for whatever reason. So let's say you have a policy worth $250,000. If you are ever terminally ill, from day one, Tamara, they will have access to that terminally ill rider, and they'll be able to go ahead on day 2, if they're diagnosed, worst case scenario, they'll have access to the full lump sum of their death benefit. They have the option to accelerate all of it, or they have the option to accelerate a part of it. That's how all living benefits policies work. Something called critical illness rider. If they're ever critically ill, if they're ever chronically ill, chronically usually means if they can't do 2 out of the 6 activities of daily living. If they can't do 2 of those, like they can't feed themselves or they can't bathe themselves, etc., then that's when you trigger that chronic illness rider. Let's see, if it says index funds or index universal life or interest rates, those are usually the words that let you know this is the part of policy that you can use while you're still living, whether it's for down payments, rent, car notes, etc. Those are life insurance, lifestyle protection insurance policies. That's what those are.
So there you go. Once again, those are important. I know that I want to be covered in the event that any of that is happening. So as we were kind of talking about earlier, it's good to have more than one kind of life insurance. So you might want to just, go through your paperwork and look and see what you currently have and make plans because you just never know what's going to happen and you want to be prepared. Miss Rico, I'm sorry to hear about your father. She said that her father has been sick and she's just going through his paperwork. 1 year later, his policy lapsed. What is the best recourse for him?
Did she say the policy lapsed?
Mm-hmm.
Okay, so that means she has nothing. Like she basically doesn't even have a policy if it has completely lapsed.
For her father.
For her father. Okay. All right. So depending on the illness, there are that come to mind about 2 to 3 different companies, depending on what he's dealing with, that can still get him approved and will issue what they call a guaranteed issue policy. And it's just a final expense policy. It'll cover just those basic necessities. Usually you can get them anywhere between $5,000 to $50,000. She may end up paying, $100, $200 a month, but that is an option for her if she's wanting to make sure that her father is covered though.
Okay, well, that's good to know that there's some sort of option for him and her. Is there a statute of limitation for canceled policies if a person dies? Is the money they paid? I'm sorry, I'm not answering the question. If you want to repeat this question on a mission, that would be helpful. And then a few of these other questions that are more in detail about the life insurance and the term and then the payout. Once again, there is another course that Robinne taught that's going to walk you through everything. Robinne, can you actually just share what you shared in that lesson, how you walk through an actual example?
How I would do a consultation, is that what you're saying? Or
no, sorry, for the last lesson that you taught, can you just give a summary of what you taught inside of the tax-free retirement lesson?
Oh, yeah. For tax-free retirement and for lifelong income, these companies, not all companies, again, it's 3,000 of them, but there are a handful of companies that will allow you to build a policy where it does not lapse. You have access to money. Your money grows with compounding interest and not simple interest. It also has all these different living benefits that you have access to. It has also let's see what else. It has the floor, which is basically you can't lose money. And it also has what we call a cap. So if the stock market is doing excellent, then, you'll get a 12% interest. And if the stock market ever crashes, you never lose money. So I'm not sure if that answers your question because I kind of don't understand which parts, because I remember talking about the IUL as well. But those IULs, they're great for retirement as well. They're super attractive to people who are trying to plan for their retirement because you can access any type of growth. If you have $100,000 that has grown inside that policy, you can access that $100,000 tax-free during retirement, guaranteed, and the company will pay out guaranteed. Even if you run out of cash value in your policy, it's one of those risks that companies are now taking on to be more competitive. They will continue to pay you your retirement income until you pass.
All right, so we're sharing a lot of information. Life insurance is such a huge topic. We can talk on and on and on about it.
Yeah.
Kind of just want to go back to the basics a little bit again. Talk about who we can purchase life insurance for. So outside of yourself, outside of your children, or even up to how old is there an expiration, not expiration date, but is there a max age on when you can buy insurance for your children? Let's just go over who we can purchase insurance for.
Okay, there's something called insurable interest. Okay, insurable interest simply means that if another person passes or gets injured, it affects our lifestyle. That includes businesses, that includes children, it includes aunts, it includes, let's say you have a brother and that brother is your roommate. Okay, if they are paying half the rent, then you have an insurable interest, because if they pass, then there's a part of that income that you will not have access to anymore. So you can have insurance on them. If you are a representative payee of anyone, whether it's a family member or someone who's not a family member, and if you're a representative payee, things of that nature, you can also have a policy on them. If you have a business, there are business policies called key person business policies, okay? Those are policies where your business partners, and if something happens to a partner and that income is taken away and that workload is taken away because you have no one to fulfill that vice president role or whatever the case may be, you can have a policy on them to basically not compensate, but to help you do the search for a new vice president, pay for the training for a new person, etc. Like, that's what those policies are for. So there's definitely insurable interest that covers almost any type of situation where you affect another person's income or ability to continue your business.
And please mention, I did not purchase insurance policy for your parents.
Yes, you absolutely can. You can purchase for your parents. A lot of people do it because parents usually are in retirement age and sometimes just can't afford what they really need. If the children even split up the cost, which is what like one of the strategies I always kind of suggest, because again, it can be costly for anyone that's over 60 years old or over 70 years old. So you have that policy, you let the child own the policy, okay? They can make payments towards that policy. And when that time comes, that benefit is then given to whoever the owner of the policy, that child has decided, whoever the beneficiary is, and they'll get that. So usually they make themselves a beneficiary, but it's completely up to you though. But they do have those policies. They have, I would say maybe about 7 different companies that are A-rated, that are known for approving those type of policies. They have those out there.
Do you need a parent's consent to create that policy?
Yes, you would need their consent, okay? You would need to know like their driver's license number if they have one. You would need to know their state ID number, their social. You need to know their height and their weight. And you would need to know, well, how did their parents pass? Just like basic information like that. But usually parents are pretty open to letting their kids pay for that policy, So it's something you can do easily.
Absolutely. So when purchasing a life insurance, one thing that I think I love the most about life insurance policies is that it's pretty flexible. So when you're on a tight budget, or whether you have great income, there's always a way to get some sort of life insurance. So if you're just starting out, let's say you've had a tough upbringing and you're out there on your own, maybe you're 18 years old and you're learning about life insurance, what would you say should be like the starting point to invest monthly for life insurance?
That's a great question. I actually have a nephew who came to me during Christmas and we had this discussion. So he works at Office Depot and he's 20 years old and he's never had life insurance, etc. So of course he was pretty much flabbergasted when I told him that he can actually have a policy that's an investment grade policy where there's no risk, etc. And so that's what we're working on with him. But when you're young, you are the perfect client really for any and everything in this world that you want. Really and truly, when you're young. But you have to have the mindset to understand, do it now instead of doing it later. So I would say if you have a job and you're making maybe $10, $13 an hour or whatnot, start off with something maybe between $50 to $100 per month. And that's for an IUL, not for a term. That's not for whole life. That is for de la creme, the IUL. That's how little you're going to be paying per month because you're so young and healthy. So definitely look between that budget. And I would say maybe by the time you're 35, you'll have twice, maybe 3 times as much to pay for down payment for the home of your dreams and the car of your dreams and whatnot. Like, it's the best strategy out there ever.
Agreed. I've heard so many, beautiful things about people who've purchased life insurance at a young age. It's like as soon as they graduate from college or graduate from their master's degree, they're ready to buy a home. They're all there's a lot of questions coming through here about Prime America. Can you even speak to it? Oh, look, I think that says enough. Are the policies legit?
They're definitely legit. They are absolutely legit. They're absolutely. All of those network marketing organizations, let me tell you, and I think this is important actually, and I'm glad that came up. One of the important things that people need to understand, insurance companies started what they call IMOs, insurance marketing organizations. They started those for a reason. Now, when it gets to the public, they're known as MLMs, or multi-level marketing or network marketing. But insurance companies, they're the ones who created these MLMs or IMOs because it cuts out the cost of employees and overhead, et cetera. So you have companies like Primerica, or you have companies like World Financial Group or PFA, or all these different organizations, right? And those are all considered IMOs because they're selling and pushing and marketing all these major insurance carriers. So Primerica is definitely legit, but they do not have the very best policies. They can get you started with the policy. They'll get you started even with retirement plans, but they do not offer the very best riders. Their fees are high. Transamerica is another company. Fees are super high. Yes, they're legit. Of course they are. But their fees make a huge difference compared to someone like National Life or even Foresters, So it's just, if that's what you have, then it's good that you have something, but definitely look into using that money maybe elsewhere if you can. Because if you can't, some people are in a situation where they just can't move because, it's a new policy and they're going to lose all of their, their value in it. But if you can move around, I would definitely suggest talking to an agent, move around, see what else you can get.
All right. I hear a lot about the fees, so
yes.
Scare me away a little bit. So let's talk about people who do not have dependents or anyone who really passed down, any of the funds to. Would you recommend for them to even have a life expense policy or a policy that is for a death benefit?
I would, only because that's the only way, other than a Roth IRA, life insurance is the only way you can grow money tax-free. Okay. Now, if you don't have kids, life insurance is basically a strategy for estate planning. But if you want to create a legacy outside of, not having kids, not having a husband, et cetera, or whatever the case may be, you can leave that death benefit for a charitable organization. You can even create a trust fund in your name. So you can say, hey, this is, I'm going to create a trust fund named Robin Alexander Trust Fund for kids who've never gotten their GED or who did get their GED wants to go to college. That's the legacy I create. Maybe that's the legacy I want to leave in this world, so you do whatever you want to do with your death benefit. The living benefits, though, do come from the death benefit. So again, if you have $250,000 worth of death benefit, or $500,000 or $1 million death benefit, if you get disabled, if you get injured, if you get sick, etc., that's what you're going to accelerate while you're living. You'll say, hey, company, this is what happened. I had a heart attack. I had surgery. I need X amount of money. They're going to say, oh, well, you know what? You have $500,000. We can allow you to accelerate without having to pay back. It's not a loan. It's just your money. We'll give you, $250,000, and you use that money for whatever. And these are not just like fabricated numbers. If you Google living benefits, you'll read and see a lot of these insurance companies do these interviews with people who have used their living benefits. Now, personally, and I think I shared this on the last class, I actually was one of those people that had the unfortunate experience of using my own living benefits last year because I had what they call child-induced heart failure and fluid on my lungs a week after giving birth. So I did have a living benefit policy. So I know personally about how great it is to have something like that in place. So you just have to, again, know what agency or what agent you're working with, know what broker you work with, and they should be able to get whatever you need done.
All right.
Yeah.
You get an insurable insurance policy on an absent parent of your child.
I always highly recommend baby daddy insurance. I do. I have I have it for my child's father. It is probably one of the things that I always hear stories about in court. I don't do the whole child support, and that's not my cup of tea. But from people that I know who have gone through the court system, a lot of people, a lot of judges now are requiring fathers or even absentee mothers to have a life insurance policy in place. So, but yes, you can have a policy on the absent parent. Absolutely.
Now, how does that work as far as, getting the death certificate if that's a challenge for the person that opened the policy?
Okay, if you're the owner of the policy, there are different types of things that you can have in place, such as, and I'll put this out here, but I'm not an agent for this company. But if you have some sort of prepaid legal, I know that it's called, I think they call it, I can't think of the name of the company. Anyway, but I just know it's prepaid legal advice. There are things that you can have in place to make sure when that time comes that the money and the policy that you own on that father or that mother or whatever situation may be, that it falls into your hands only, and they will give you the process of getting that death certificate, etc.
Is it Legal Shield? Somebody yelling out Legal Shield.
Legal Shield, yes, thank you. Yes.
Okay, so they're cracking up about the baby daddy insurance. A lot of people didn't know that was possible.
Oh, yeah.
And there's still quite a few questions coming in, but we've answered a lot of these at the beginning of this lesson. So I'm going to ask you guys, just out of respect for everyone else that's been here since the beginning, that when this lesson is over, just go ahead and jump in and review it from the beginning. Other than that, let's just kind of just talk about just the application process. So after, and I think this might depend on the company, but after you've submitted your application process, are there any tests that needs to be completed? How does that usually work out? What information is also needed from you in order for this to process?
Yes. So when I do consultations, Tamara, one of the things that a lot of people would have to understand is that you're giving me all of the information. I'm talking about from driver's license, social security number, banking information. I know that I've had questions about why do companies ask for banking information? Companies, number one, they do not have a separate budget for a certain person to call you back if you're approved and say, hey, now we need your banking information. That's not how it works. When you do your enrollment form, you're going to put on that enrollment form what you want, how much money you want, the beneficiary, your social, all that, necessary information, and then they're going to send that to underwriting. Okay. Once you go through underwriting, they're going to look at if you have any kind of health issues, if you're taking medicine, what kind of medicine you're taking, etc. The only way you're going to have a medical exam is if they see something in your history that is pretty recent. Okay, so let's say, and I'll just use me. Let's say there was a policy that I wanted, okay? And for that policy, because of the heart failure I experienced last year, the company wanted me to do another echocardiogram, all right? Because they want to make sure, because this is pretty recent, last year was pretty recent. They wanted to make sure that I was not having current issues and everything is back healed up the way that it's supposed to be. So if it's something like that, yes, you can trigger a medical exam. But companies these days, insurance carriers, because they're becoming more competitive, so many companies do not require a medical exam. It's called easy underwriting. That's literally the term that we use in the industry. Easy underwriting. You don't have to do any blood, no urine, no medical exam, nothing like that. They just take the information you put on that enrollment form and they just believe it and say, hey, we'll look at the background. Does it match up? There you go. You're approved.
Well, that sounds very simple.
Yeah, I mean, some companies take about 3 days, depending on the situation. Like we just recently had hurricanes, it could take 30 to 45 days to get an approval. But once that information is in, though, the underwriter usually starts working on it almost immediately.
All right. Well, then let's talk about the final. Let's say something does happen to you, and it's time to, release the death benefit. How long does it usually take your family to receive the funds?
Every company is different. I've heard of some people, which I've never been in this situation, but I've heard of some agents being able to deliver a policy within just a matter of days. I know Aflac is one of those companies that their competitive edge, if you will, is the whole 1 day pay situation. And so for their life insurance and all the different policies they offer, that 1 day pay is what, they pretty much market on. So you have those companies like that. Then you have companies where the agent will deliver it to you maybe within the next 2 to 3 weeks. So it really just depends on the company. It depends on even the agent too, because some agents can be lackadaisical. Just depends on who you're working with, or the agent may not even be in the country. I've been in that situation before on vacation, and something has happened, and I need to deliver a benefit to someone, and I just can't. So I have to either get somebody else or. So it's just different situations, but it shouldn't take no longer than maybe 3 to 4 weeks, though.
All right. So
and that's the longest time.
I'm sorry. What was the longest time?
That's the longest time. 3 to 4 weeks is actually a long time. You really should be getting it in the first maybe week. So
yeah, there's things to take care of. So it would be
yeah,
nice if it was within a couple of days.
yeah.
Let's talk about what can prevent you from getting that death benefit. I've heard of foul play. What is that considered to be? How about suicide? Can you walk us through reasons why you would not get the payout?
Yes. So something that they teach you while you're getting your license and you're going through the FBI fingerprints and just that whole process of getting licensed. Something they teach you about is 2 years liars should pray. Okay. So if you lie in your application, all right, and you get approved for it within 2 years, if something happens to it and you falsified something on that application, then you are not going to get that death benefit. So liars need to always pray for 2 years, because legally after 2 years, if the company has not verified whatever you said on that application, then it is not contestable. It is incontestable. They cannot do anything about it, and they have to pay out. Okay, so yes, there are things like that. Suicide. Now, there's usually between 2 to 5 years. Sometimes it's 2 to 10 years. If you die because of suicide, that's usually automatically no-go. Doesn't matter how much money you have in that policy, how long you've been paying on it. If the fine details and the fine words in that policy says in 2 years, if you commit suicide, you can't get the money, then guess what? It doesn't matter how much money is in that policy, it's not going to be anybody's. Let's say sometimes if you change a beneficiary, okay, let's say a mom passes, but right before the mom passed, she had her brother as a beneficiary, but she changed it to a grandson because the brother did something really, detestable that she didn't like. And let's say she sent in the paperwork for her grandson to instead receive that death benefit. If she passes and they have not processed that change of beneficiaries, that's another reason why someone could not receive that benefit. All right, it'll still go to whoever they have in the system from the time that they received it and the time that they process it. So if it's not already processed, then yeah, you're not going to be able to get it. So that's why it's always better to just work on stuff, get stuff done as soon as possible.
All right, so include that. That is great information. I mean, I knew this lesson was going to be great, but you shared a lot of gems, and I just want to know: do you have any best practices that we should follow as we have policies? Should we review them? You know, yearly, monthly, or what's the maintenance?
Yes, I would definitely say every year at the very least. That's when you want to look at your policy. Any type of major changes is income, if you're married, if you have a kid, etc. You definitely want to update and upgrade your policy sometimes. I would even say probably when you're vetting these different agents and these different agencies, make sure, again, you're working with people who are going to guide you to the right companies. And you know when they're guiding you because you can feel that sales resistance. You can feel yourself having that sales resistance if you're working with someone who's not really about helping you and your family. So those are the two things I would say really pay attention to. But definitely update your stuff, look at it every year, maybe even every 2 years, you know, because everybody's situation doesn't change drastically throughout the year. So, but if you have any major changes, definitely look at it.
Absolutely. So,
Yeah.
Robin, you have a special offer for dream builders.
Yeah.
Your e-course. Can you kind of just share some information about that and
Yeah.
set up?
Yes, awesome. So, Dream Builders, there is a very special offer. I am launching a e-course website this coming year, in the next few days, actually. And with that e-course website, you will have access to what we call a wealth specialist e-course. That's for those who are wanting to get licensed or those who are already licensed, but they need help in building their business and understanding how to get licensed and how to use that license, how to build your clientele, how to close, how to understand the different policies. What did I do to get into the position that I'm in? So it's basically that course, that wealth specialist course for those who are wanting to get into financial services and help families. Then you'll also have access to a course we call the not-for-profit bonus hacks, okay? It's for those who want their 501c3. My background actually started as an entrepreneur in the nonprofit sector. And so I was working with all these different sponsors like Capital One and Wells Fargo and HEB, et cetera. In my very first 6 months in the nonprofit sector, I had over 12 different corporate sponsors and raised over $40,000 during the recession in 2008. That was my first go as an entrepreneur. And so just from there into now, I've always worked with corporations and supply diversity. So I know that nonprofits do struggle with that 501c3. They struggle with understanding how to get it, how to answer the questions, etc. So you're going to have access to both e-courses for only $55. And that's a one-time payment. You will not have to pay the monthly fee for the Wealth Specialist course, and you will not have to pay the monthly fee for the nonprofit course. That is a one-time fee that you will have access, unlimited access for a lifetime or until you cancel your own account.
All right, thank you so much. And once again, Dream Builders, the link is inside of the Academy, and it's also going to be posted in the Facebook group. It should already be there, actually. It'll be posted right at the top. And we can continue this conversation in the Facebook group as well. So Robin is a Dream Builder. She is in there.
Yeah.
If you have a question that you did not get answered today, just go ahead and drop it in the comments section under that post. And she's tagged in there. She'll just jump in. Everyone, Robin in the Facebook group. She has been amazing, and she'll help you with your questions. All right. Well, guys, thank you for joining us. I hope you all have a happy new year. We will see you in 2019. Woo, woo, woo.
Woo, woo.
Thank you so much, Robin. Good night, guys.
All right, bye.